All right, guys, back to work. Fantastic job today. What a beautiful slingshot reversal off that low. Hope you guys made a bunch of money off that this morning. Now, I got more good news for you. We got another beautiful chart pattern setting up on the S&P and the Nasdaq for tomorrow morning. I have a handful of what should be pretty easy winning trades on my radar for tomorrow. And as always, we'll cover the entire game plan tonight in the video. By the time we're done tonight, I want to make sure everyone has a strategy to make some money tomorrow as well. Boy, it's been a fantastic week so far. Let's keep the good times rolling. Enough of the intro. Let's go get going here and make some more money on Thursday morning. Boy, charts are looking great tonight. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two, I think pretty simple but really important clues on the charts in front of us that are telling us where the winning trades are waiting for tomorrow. One of the big clues is right here on these hourly charts, these 60-minute time frames. You can easily see we are still overall bullish on the S&P and SPY, overall bullish here on the Nasdaq and the triple Qs. I know we got knocked down yesterday, but as I mentioned last night on the video, it'll take more than just one big leg down here in a bull market like this to call this a bear market. So we're definitely bullish overall. I like to use this higher time frame, this hourly chart, as a bit of a directional filter, right? It tells us what the overall momentum of the market is, and it makes it easier to make money going with that direction. But these hourly charts, they only go so far, right? I have one, I think, even more important clue that will help us time the best entries for tomorrow. We'll talk about that one more important clue and wrap this all together and time the best entries here in a moment. But before we do that, though, let's check schedule for tomorrow because I got some big news tomorrow. Tomorrow, no, it's not that jobless claims report at 8:30 Eastern time. I definitely will watch and see what it comes out as. But I think the big news tomorrow, if I had to guess, is the ISM Services Index. We know the jobs market is important right now to the Fed. And so the ISM services, the services sector of the jobs, the employment market, that will definitely be on my radar tomorrow. Remember, anytime we see news at 10 o'clock, we call the 10 o'clock shock in our trade room. So I would definitely want to make sure you're at your desk in that 10 o'clock to 11 o'clock hour tomorrow morning. That's a big catalyst we have tomorrow morning. We also know, too, that tomorrow night, in tomorrow night's video, we'll get ready for that big non-farm payroll number, the biggest news of the week. So the hits will keep coming this week, but keep that on your radar for tomorrow, that ISM service number at 10 o'clock Eastern time. Now, let's get back to our charts, though, because it's good to know when the news is, but we don't trade the news. We trade the setups we see on the charts in front of us. It's so much easier that way, isn't it? Now, over on the 60-minute, I talked about how we're overall bullish. That's our overall directional bias. But again, we're not going to use this hourly chart or really any time charts to time entries. I like to use tick charts to time entries. Tick charts are based on volume. Tick charts make pattern recognition a hell of a lot easier. This, of course, you'll notice here upper left here, is a 7,000 tick chart. And that yellow line right there, by the way, in case you're watching for the first time, that is the 21 EMA. It is pretty much the only indicator we need to use to find winning trades each week. I promised you earlier more good news on this, and this is what I think one of the easiest chart patterns we see each week in our trade room. We are bullish going higher here into a trading range. Ranges act like magnets, a lot of volume with ranges, and ranges love to rotate, right? They love to rotate back and forth, and we use these triangles, we use these pendulum swings to find levels of support and resistance. So we're overall bullish on the 60-minute time frame and a bullish range here on the tick charts. When I see stuff like this, there are two, I think, pretty easy ways to make money on these tomorrow. The one I like the most is what I would call a breakout pullback. A breakout pullback. Now, I know most folks, we know what breakout pullbacks mean, but did you know there are three different types of entry patterns or ways I can trade a breakout pullback? Let's talk about those right now because this is one of my favorite trades here for tomorrow. First things first is that if we start going higher here, I'm going to look for separation off the moving average. Let me talk about in our free video classes, separation equals strength. When a market separates off the 21 EMA. So one of those three trades that make up a breakout pullback pattern, this is one. It's a higher high in price where it barely pulls back to that moving average. This sets up for what we call a bear trap or a technical trap pattern. Now, what I'll look for is a move right below that low and a strong green candle closing above that 21 EMA. Now, pay attention. Anytime we break out of a trading range, the size of that first breakout leg can be used as a measuring leg, okay? So to the size there, pin it off that low, and that will tell you now where to place that final target. Remember, if you want to make more money, get better at holding on to your winners, and knowing where that measured move will be makes it easy to put your final target there. Now, at this point, I don't want to buy high up here. I want to buy nice and low. Think about what was resistance, and now let's use it as support for that breakout pullback. When I think about a breakout pullback, what I think about is a two-legged pullback. What's that mean? It's just like it sounds. It's one leg under the moving average, a second leg going lower. Now, in the free video series, I talk about measured moves or ABCDs, right? One leg, two leg. When I say two-legged pullback, I want you to think about a measured move that goes a bit too far, right? I don't know exactly where it'll be tomorrow, but I do know that's the formula, right? It'll be somewhere right around this area. Again, what was resistance becomes support. Now, remember, I don't have a crystal ball. This may keep on going for all I know, and I will talk about how to make money on that in just a moment. So I'm not going to pick a bottom on this, right? I'm not going to blindly buy into it. I think we all know that's not an easy way to make money consistently. What I'll do is I'm going to wait for a pullback to the moving average. This is where we apply that classic failure pattern everyone loves in the free video course. What does that mean? It means let's trap some bears in. Bears try once, bears try twice. See, in my experience, it's so much more reliable than using indicators or blindly buying or reading tape or divergence. I just wait for the bears to come in, let them try a couple times, then I know where their stops are, or as my first mentor would always say, then I know where their pain is, and I can buy into their pain. If you're short right here, if you're caught short, you get stopped out, you're buying your way out. This will fuel that move going higher. And again, this is a failure pattern like I teach in the free video course. Now, think about this now. Think about this. We have all of that bull momentum going higher. Where does the market want to go? It wants to go back and take out that high. Buyers want one thing, to go back to retest the high. Now, remember that bear trap we mentioned before? Same pattern now. Third pattern look for after a two-legged pullback, and I apologize, this drawing is getting a bit smaller here, is that higher high in price and a move right below that low. Now remember, the key to these traps, the key to these technical trap patterns is you want to get that separation off the moving average. It's one of the biggest giveaways that'll tell you when to take those trap patterns. So 3 different entry techniques during a breakout pullback is a bear trap on the way up. Remember, measured move, two-legged pullback, a bit more than a measured move. Trap those bears in, failure pattern, and then add to your winner or jump back in again on that technical bear trap on the way back higher. That is one of the 2 trades we look for in a bullish trading range. And of course, a lot of examples of those inside our free video classes. Now, we may not get that run higher. Got that big move down we saw earlier on in the week. The second trade we look for whenever we have a bull range like this is to look for what are basically bear traps underneath all of these lows. Remember, a range acts like a magnet, and ranges love to rotate back and forth, right? Don't they? So we're overall bullish. I'd love to buy down here. How do we do that? I want to get underneath some of these swings, underneath, get a support. There'll be a trend line over here as well, right? Trend line there, right? So trend lines, things like that. Find support below the range. And again, I don't know. It might be here. It might be all the way down. I don't know. What I do know, though, is that this is a horrible spot to be a seller. Not an overall bull market, not at support, not with a range magnet above us. You don't want to sell down here. But I can almost guarantee you, a lot of rookie traders aren't going to know that lesson yet. They haven't paid their tuition to the market yet. A great spot now to 1, 2. Again, why 2? Because I want to trap those bears in. There's that failure pattern. Up we go now into that, you got it, into that trap combination. you will quickly see these failure into trap combinations everywhere. And once you learn them, you'll see how well they work. Failure, trap combo, and remember, mark the amount below, mark the amount above, leave that runner, because now you know where that sucker wants to go. And I know you guys love these patterns too, because I get so many great emails and success stories from you guys each week here on our YouTube channel. Let's slow down though first though, because I know most of you guys and gals watching right now, you know these patterns, you're making money with these setups. But if you're here for the first time today, this might be a brand new strategy, a brand new language to learn. What the heck is this guy talking about? Failures and traps? Don't you worry. I teach this entire roadmap. I have lots of examples of failures, traps, and a whole lot more. I teach the entire thing in more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up and take that free trading course, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room each morning that tells us where the winning trades are going to be that day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries and start making more money. Guys, the bottom line, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries, if you're taking too many losses, if you lost your confidence in your current trading strategy, hit that link that popped up. Take that free video course. Everyone loves the free video series. It is perfect for anyone who is serious about making money, consistent money in these markets. Also be aware too, I'm going to put all the important links we talked about tonight in the description of the YouTube video. I'll put my free class links down there. Start there first, learn the roadmap. Everyone loves the free video course. Don't forget too, we trade together every day, 8 o'clock Eastern time in our trade room. I'll put trade room membership links down there for you. And keep in mind, I post a lot of charts and updates and mindset stuff on Twitter, or X, as the kids call it these days. If you're on Twitter X, give me a follow. Again, all the important links you'll want to learn more, to earn more, it'll be down there for you in the description of the YouTube video. But again, start first on that free video course, learn the roadmap, start making money on your own. So I talked about now 2 ways to trade a bull range. One is that breakout pullback. The other is that bear trap off of that low. Those are the creme de la creme we look for tomorrow, but you know what's going to happen, right? Sometimes we don't get the perfect setups. A lot of times we get some variations of those patterns, right? So let's talk about some variations of those trades here now. That way, in case things get messy tomorrow, you have some different ideas for what we're watching for tomorrow in our trade room. Now, on the Nasdaq, before we talk Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing the link with other trading buddies. That small action takes no time for you here tonight, but makes a big impact on this channel, because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days. I appreciate you guys carving out some time, a few minutes every evening with me on these videos. So thank you so much for the likes, subscribe, and shares. Now, let's talk Nasdaq, and specifically talk about some more variations for tomorrow. Maybe you do need me to tell you here, we're still bullish overall here on the Nasdaq, on the 60. As I mentioned earlier, it takes a lot more than just a strong shot down. I mean, look at how bullish this market is right now. Yeah, I'm not ready to call this a bear market. They have to hold this and give us another big leg down before we start calling this a bear market. Turn off the television, turn off the news media. Remember, their job is to scare you right now, right? To thinking the world is coming to an end. It's probably not, right? Probably not. It's always going to be the same stuff over and over again. Over to our tick charts now. You'll notice a 4,000 tick chart, upper left-hand corner. Again, tick charts make entries much easier. Open a tick chart, compare that to a 1 minute or a 2 minute chart. Everything looks easier, right? You'll see for yourself. Range, right? Bullish range here on the Nasdaq. The big clue. Breakout, right? Breakout pullback. Bear trap off of that low. We talked about those on the S&P. Let's talk about some variations now, all right? Because in all reality, we may go up, but not get that breakout pullback. We may go up here. We may take out that pendulum swing right off the low. We see this all the time. All the time what happens is because ranges act like magnets, right? So all the time, right, we'll go up and it'll get whacked right back down again. What ends up happening is it pendulum swings back down and we can buy it back up again. But can I make any money off the high like this? There's one pattern. Remember, we're bullish overall, right? So there's got to be careful trying to pick a top on this. There's one pattern though I look for in these scenarios. It's called a V-top reversal. A V-top reversal, right? We go up, it gets whacked back down, and it begins to grind going lower, right? Grind going lower. Now, these can be difficult on the emotions because you're going to see that pendulum swing. You're going to want to make sure you get in, right? The FOMO is real in those situations. Believe I know exactly how tough it is not to chase after it. But remember, the amount above, the amount below, all we do now is, watch closely here, draw a trend line off those lows, bring that trend line up around that high. Now look left, find one of these prior swing highs that lines up around the top of that channel and repeat after me. First test is the best test. First test is the best test. These are very, very common. We saw a little pop and grind up there today, right? No surprise, buyers. We're buying the first test is the best test there, okay? That's called a V-top reversal. If we run up and get whacked back down again, and again, amount above, the amount below, and we know that is where your target goes. And then what do you do down here? You trap the bears in, right? And you boing right back up into that trading range. Another variation of this I want to remind you too is every once in a while, we get these breakouts, but we don't pull back, right? So sometimes what happens is it'll break out and begin to grind going higher. Now, these are pretty easy because once it pops and begins to grind like this, all you do now is draw a trend line off the highs, bring it down off that low, look left, once again, find one of those prior swings. Ideally, we'll line up the low of that channel with that prior high. Like that right there, I'll tell you, in that situation, tough to lose money in that situation because the grinder, and you'll see for yourself, right? Again, the grinders, they love to do these. They'll grind up, right? And then pull back and everyone piles on right below that prior swing. This one kind of ran out of time today, right towards the end of the session there this afternoon. But same idea, right? It pops up, it grinds higher. And notice how you look for that channel off the highs and find that swing. That happens all the time, all the time. We call these pop and grinds. We pop up, we start grinding. And again, these are tough because it's going to make you want to jump in, right? The FOMO is real difficult to tame in that situation. Draw the trend line off the highs, bring it off that low, and you'll see for yourself. Look left, find some prior swings, find that prior high, because again, breakout pullback style, that gives us that location. Look for that trap entry, look for that failure entry, right? Failure into pullback combo, traps, failures, pullback combos. You'll find that much easier once you get to the video course, right? That free video course linked up there in the upper right-hand corner. That will make a lot more sense to you once you get through those videos. All right, guys? Those are some variations going higher. Let's talk about some variations going lower here. Because in all reality, this really is the best place to enter because we're bullish. We can buy as low as we can. I talked earlier about that V-top off the high. Same thing down here. If we V-bottom off that low, these are tricky because you don't get the entry, right? I want to go lower. I want to trap the bears in, right? I want to trap these bears in and buy into those stop losses, right? Use that two-try failure pattern you guys love so much, right? So trap the bears in like that. That gives me a good risk-reward ratio going higher. But if it V-bottoms off of that, right? See, now that risk-reward ratio, it's not great, right? It's not great anymore. So if it V-bottoms and begins to grind up like this, all I do is mark that high, mark that low. Again, look left, find one of these prior swings, and grab that first test off that low. That will get me in below a prior swing, gives me a better risk reward ratio. And again, a lot of examples of those inside that free video course. This could be a bear trap. It could be a failure pattern. I can't teach everything, unfortunately, in these videos, but you'll learn a lot more about this stuff inside the free video course, all right? So that's the V bottom. And then one of my favorite trades, which we don't get every day, but I'll tell you, it's one of the best trades we see in our trade room is we oftentimes see a run down. We oftentimes get a two-try failure. We get that nice, easy winning trade popping back up. But ranges, they love to break out pullback. And so oftentimes we'll take our 1-to-1 target, we'll move that stop up to point of entry. It's a winning trade. I tend to take my profit targets back at the edges of those ranges, but for whatever reason, it runs back down again. See, sometimes that breakout going lower, remember, anytime we see a strong move in one direction, we know the bears, they want to come back and retest that low. So we might get a 2-try failure. We might get that nice bounce back up, nice easy winning trade, but the bears come in and they whack it back down again. These double bottoms are a gift. Remember, we're bullish overall. So anytime we see a double bottom or retest of that low, it could be anywhere around that area. It doesn't need to be a double bottom. In fact, the best ones will go a bit further, right, through that low. The best ones overshoot those lows because that fools the rookies into thinking this is a breakout. It's probably not. We got more support levels waiting down bottom. Now again, what I'll do is I'm not gonna blindly buy down here. This is a horrible spot to be a seller because think about this. Anybody who sells short right there, where's their profit targets? Their profit targets are down here, usually, right? So sellers up here become buyers down here. Okay, now in come the rookies. 1, 2, I know this because I made this mistake repeatedly almost every day when I was a new trader. I'd see a strong move down. I wouldn't get any good signal going in. I would chase after it, and sure enough, I was getting squeezed, going back up again. This is that same failure. Run those stops, that same failure into trap pattern combination. I'm telling you, once you learn this sequence, once you learn to trap bears at support levels on the wrong side of the moving average, I say wrong side because we're overall bullish, right? So if you're overall bullish, trap bears below the moving average. In this case, there's a range above 2. That gives you a stop run. And then once you go higher here, find that separation off the moving average because separation equals strength. Grab that little shallow pullback, blow that low, failure into trap combination. And whatever you do, do not cut that trade too early because that range up there, what does it want to do? It wants to rotate, right? It wants to rotate the amount below the range, the amount above the range. I'll tell you right now, leave a couple good runners this week, and in my experience, you can make your entire month worth of profit on one good, well-placed runner. But of course, knowledge is power, right? Knowledge is power. Have to know where to place it, and then have discipline to leave that runner and let that runner run. All right, guys, that's the game plan for tomorrow. Those are some variations I'll be watching for tomorrow in our trade room. Now, speaking of trade room, tomorrow morning, 8 o'clock Eastern time, I can't think of any easier way to learn to make consistent money in these markets than come out and learn this stuff and trade with me every morning in our trade room. Once again, I'll put all the important links you'll need tonight, the description of the YouTube video. Everyone loves the free video classes, so start there, learn the roadmap. I'm sure you'll love it just as much as most folks do as well. And hopefully I'll see you sometime soon trading with us in the morning trade room at 8 o'clock Eastern time. All right, guys, hope you learned a bunch this afternoon. Hope you use this knowledge to earn a bunch. In the meantime, as always, thank you so much for tuning in and all the support. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time, all right? Adios, amigos. Bye for now.